The US stock market is showing astonishing results. Just in 3.5 months, its growth has equaled the annual growth of 2019. Apparently, the equity market, with its huge capitalization, cannot maintain such a rally until the end of the year. Besides, this is not the beginning of a new cycle of multi-year growth, but rather its end. The stock market has been rising for the 12th year since the crisis of 2008-2009. Some analysts predict the upcoming correction. However, it's necessary to analyze the dynamics of the main US stock indices before jumping to conclusions. So let's find out what has happened on Wall Street over the past week. The Dow managed to reach 34,220. However, since the beginning of the new week, there has been a slight correction. According to forecasts, the Dow will be held at its peak until its future trajectory becomes clearer. In other words, the index will either fall or sustain its bullish run. Next week, the Dow is forecast to stay in the range of 33,600 to 34,200. The final results of the reporting season are sure to somehow affect the index. Quarterly reports of a number of companies published last week boosted investors' confidence in a rapid economic recovery. So a negative correction is unlikely to occur soon, although it seems inevitable in the near future. The S&P500 index climbed by more than 50 pips during the week. Currently, it's trading at the level of 41.65. The quotes are likely to remain within the range of 4,100 to 4,200 until the end of the week. Investors will take a wait-and-see approach ahead of the publication of a large block of quarterly reports this week. Only after their release it's relevant to make any forecast. The NASDAQ composite gained less than other indices. Nevertheless, last week its quotes experienced a strong rally. It's currently trading at 13,925. This week it's likely to remain in the 13,750 to 14,100 range. The further trajectory will be set by the results of quarterly earnings reports of companies included in the index. In particular, on April 22nd, Intel's earnings report for the first quarter of 2021 will be unveiled. According to the consensus forecast, its revenue will decrease by 10.3%, and this may trigger a price correction next week. Investors are awaiting the upcoming quarterly report of Intel Corporation, whose results could be negative. If so, the quotes may fall by several pips. The shares of Philip Morris are in the spotlight. Its quarterly revenue is likely to rise by 1.6%. Demand for traditional tobacco is declining, although the company may offset the losses in the total revenue thanks to the tobacco heating systems, including IQOS. Netflix quarterly revenue is projected to increase by 23.7%. If so, its shares may rise even higher, as the company rarely disappoints investors with negative quarterly results. In general, market sentiment is positive. The vaccination campaign in the US proceeds as planned, which boosts investors' morale. However, last week, the number of new COVID cases across the world reached the highest level since the pandemic outbreak due to the record surge of infection in India. To sum up, the global economy and the US economy are in abnormally long economic growth cycle. Usually, the cycle does not exceed 10 years. The sharp fall of the US economy in the spring of 2020 did not lead to a deep crisis or recession. The US government and the Fed timely made huge money injections in the economy. Nevertheless, the capitalist market economy goes through cycles and it cannot be changed. The US economy is nearing the end of the cycle. In addition, it's overheated and requires a big correction. Now, any negative news may trigger a correction. Globally, the end of the cycle may occur in the next 1-2 years, finishing the era of super cheap money. The world's main central banks will be forced to stop pumping money into the economy. You've watched Weekly Financial Review on Insta TV with me, Anna Kasatkina. Stay tuned.